All right, we are live here, February 2nd, just after 11 a.m. We'll get started with the show in a second. We'll take a minute to go live on all the platforms. So just give us 1 minute. All right, welcome everyone. Looks like we just went live on another platform. Just give us another minute and we'll be live everywhere.
Good morning to everyone in the chat.
All right. Looks like we're good to go. Let's go ahead and get started with the show today. Welcome, everyone. My name is Nick Hiersche. I am the president and founder of the Mortgage Calculator. We are a lender that specializes in alternative financing options, as well as conventional FHA, VA, USDA, and all the standard mortgage programs. I'm joined here today with our sales manager, Jose Gonzalez, with 27 years of experience, and our COO, Kyle Hiersche, who will go in a little more detail about how to work with our team. So today's topic, we will go over all of the rates for today. It's just after 11 a.m. on February 2nd, and all of our programs are live with the rates. A lot of volatility. The Fed just met yesterday, obviously, so a lot of things going on. So let's see what's going on with the markets. And a little bit later, once we check out the live market rates, we're going to have Jose do a little bit of a deep dive into a specific product. So let me share real quickly what our topic for today will be. So once we go over the live rates, Jose is going to pull up a couple examples to purchase 2 to 4 unit properties. So typically the most common solution for that is an FHA program where a borrower, typically a first-time home buyer in many cases, can purchase a 2 to 4 unit with still only putting 3.5% down and using some of that rent income to qualify. So great options there. And Jose will present a couple alternative options as well for a multi-unit purchase. Just for comparison's sake. So give him a few minutes to get those together. And in the meantime, we will go over the live rates. So let me switch over to our live pricing tool. All right. So this is our live pricing tool for our mortgage professionals. As we stated, we are a licensed mortgage lender in 17 states, and we can do investment properties and business purpose loans in most other states as well. So please get with one of our 300 plus loan officers if you'd like a full loan estimate. This tool is for our mortgage professionals just to check out the general pricing and rates for the general programs that we have. So if you'd like a full detailed loan estimate, please get with our team. This is going to show us just what the markets are doing today on these different programs to give a general pricing indication. So what we always do on the show is we're going to pull up a pretty standard scenario. So for all of our examples today, we'll do an 80% loan to value, which is a 20% down payment. We're going to search for a desired price of 99. So typically right now, especially with the elevated rates, most borrowers are requesting to buy down the rate. How they finance that varies, but we'll look for a rate with 1 discount point in cost, just so we can look at what is the most common scenario. We're going to go through a few different scenarios. Every morning, we always go through the conforming conventional programs. We're also going to check out the FHA programs, which is usually the second option. And then we go into our expanded guidelines. That's where we specialize here at the Mortgage Calculator. We have thousands of loan programs beyond the conventional and FHA options that are typically the options for most lenders. So we'll go into a few examples there. VA is obviously for our veterans that qualify. So if you do qualify, please get with our team. We'll quote it up in just a few minutes. It's very quick for us, but not everybody does qualify. So we appreciate your service. Just let us know. And same with USDA. Not everybody qualifies because the property must be in a rural area to qualify for USDA financing. So we won't do that today on the show. But let's start with our conforming conventional example. We're going to do a purchase, 30-year fixed, primary occupancy, single family regular home, 1 unit in Florida, Miami-Dade, because that's where our office is based. Our estimated FICO for all of our examples today will be 760, and our estimated debt to income ratio will be 40 for all these examples, just so we can keep everything the same and check out what the markets are doing. So let's see what we have today for our live rates. Again, today is February 2nd, and it is just after 11 a.m., so we have live programs on everything. So a big difference from yesterday, we'll see. These programs for the Home Ready and Home Possible are great programs, but they do require a borrower to be under a median income or a property to be in a census tract. So let's cruise down to the standard programs that everybody can qualify for. And the first option we see here is our conforming 30-year fixed. Big difference from yesterday, right? Yesterday it was a 6% rate for 1 discount point in cost. Today we have a 5.75 rate for just that 1 discount point in cost. So that's why we love to do the show. Obviously the Fed announcement was in our favor as rates have gone down this morning. So some amazing options. Please, if you're shopping right now, now's the time to strike. Our team can quote these up very quickly. However, if a borrower does not qualify for conforming or conventional programs, let's check out what the next best option typically is. So we'll pull up our quote system to 80 LTV again. Same 1 discount point in cost is what we'll look for. And we're going to check out our FHA program. So everything else will stay the same. Jose will go into the detailed multi-unit later, but for this example, we'll keep everything the same so we can compare the FHA to the conventional. And let's see what we have this morning. So it looks like FHA has gone in our favor as well. So yesterday was a little bit higher. Today we're looking at our top result here, a 5.125 rate for 0.5 in discount points. So the computer found that that was the best combo for this scenario, which is a great option. And as I say every time, make sure if you're comparing FHA to any other programs, always check the APR to compare anything, because FHA, you'll notice, does have a monthly mortgage insurance and an upfront mortgage insurance fee, and therefore has a significant effect on the APR. So always compare those. But great options. We love to see the rates go down. Everybody should be happy today. Obviously, that worked in our favor. Now, let's go back to our quick pricer. For a borrower who may not quite qualify for FHA or conventional, most lenders may be out of...
Someone is at the front door.
Sorry. Most lenders may be out of options after FHA and conforming. So typically, we would have to try to fit them in those programs, but we won't have any other options. But here at the Mortgage Calculator, we have thousands of other options here under our expanded guidelines. So if we select this, we can keep everything else the same, but we'll notice for non-QM, our income verification popped up here. So this is for our alternative income programs. So full doc is obviously for what we just saw with FHA and conventional, but now we have tons of other options. So 1-year alt doc, 2-year alt doc, asset related. We do that in a couple shows. Business bank statements, 12, 24 months, very common. Investor DSCR, our favorite programs for non-owner occupied. And our most common requests for non-QM are our personal bank statements, 12 or 24 months. So for the show, we'll always do a typical scenario, which is going to be a self-employed borrower. So we select self-employed, using 12 months of personal bank statements to determine their debt to income ratio. And that way they can typically qualify for more or qualify where they would not qualify otherwise under a full documentation program. So we love to do these programs and provide solutions for our borrowers. And let's check out what the rates are. Obviously, the rates are going to be a little bit higher for these non-QM programs. They're definitely different and unique. However, this does allow us to make borrowers' dreams come true and get a home when they would not otherwise qualify. So you see here, there's a couple options: 7.25 rate for just under 1 discount point, 0.875 in cost. And we have, dozens and dozens of different programs that vary. Some of these ones in the higher rate areas, obviously, we wouldn't want to recommend that, but those could be for borrowers who maybe just came out of bankruptcy or foreclosure or some other event. So when we go into these non-QM programs, there's just tons and tons of options of all different programs that apply to very unique scenarios. So please get with our team. We can find the exact right fit for you within these programs. And this is really where our team shines, to find these alternative documentation that will work best for our borrowers. Now, before we pass it off to Jose to go through the detailed examples, we always want to run through our investment properties. We love to work with our investors. So we'll pull up our occupancy to investment and we'll run a comparison on our conforming options. Obviously, FHA, VA, USDA are not options for investment properties. So we're going to compare conforming to our non-QM options. So we'll start with conforming, pull this back up to 80 LTV, just like we had before, 20% down payment, purchase, everything else staying the same. It's just going to be investment property. And let's check out the conventional investment rates this morning. Remember, the conventional programs have added an additional cost penalty, essentially a LLPA, to these programs for investment properties. So you do see significantly higher discount points when we do investment property. So similar rates, very nice rates there, 6.5% rate as the top option for 2.625 in discount points. So significantly higher cost. Our computer was not able to find an option for just one discount point for the borrower in this case. So we just see that those are some of the factors that push our borrowers to ask for alternative quotes. And that's where we love to come in as the mortgage calculator and provide our non-QM options. So if a borrower qualifies full doc, that's amazing. We can offer this, quote this up. But the beautiful thing about our team is we have thousands of other options beyond just the one conforming option, right? So when we click on expanded guidelines and we select investment property, we're going to do a few things. There's obviously tons of different options for investment under all these non-QM, but our favorite one actually doesn't require any income at all. The investor DSCR program is our favorite because it does not require any personal employment verification or any personal income from the borrower. We're going to do a business purpose loan where the property is going to generate rental income to cover that PITIA of the loan payment. So we're just going to look at the property and its ability to generate rent in order to cover the expenses of that property. And when we're doing non-owner occupied under non-QM programs, we're always typically going to have a prepayment penalty. We can obviously have a no prepayment option that will just cost a little bit more. Typically, we're going to always price it with a 3-year option. That's pretty standard for non-QM DSCR in particular. And there's also a 5-year option to save a little bit of money if you're planning on holding the property a long time. So let's check out 3-year option. This is a typical scenario. So we can compare our conforming with our amazing DSCR, no documentation, no income required, and boom, we see some amazing movement from yesterday, right? So today we're having rates just under 8% for under one discount point. So that is amazing and a great comparison to those conventional rates you just saw because our investors want to save money, right? So 7.99 rate, a little higher rate, the property still may cash flow. However, the investor only has to pay 0.975 in discount points, whereas before for conventional, we saw over 2.5 discount points. So saving money for those investors to purchase more investment properties is very important. So our investors love these programs. Obviously, investors love to not have to worry about income documentation as well. And these loans are much quicker and easier to accomplish for the investor typically. So we love these programs. Obviously, some great improvement in the DSCR rates today, even from just yesterday and obviously over the last few months. So please get with our team. We'd love to quote these for you. There are dozens and dozens of program options, as you can see here. So again, let us know which one may work best for you. Some of these may allow short-term rental income. Some of these may allow a property that doesn't quite cash flow, all kinds of ins and outs of the DSCR program that we love. So please get with our team on that stuff. So now that we're done with the daily rates, let me quickly switch back over, pull up our topic for today since a bunch of people just tuned in. And I'm going to introduce Jose's topic here. So I'm going to let Jose take over in 1 second here. He's going to go through some options for, in particular, 2 to 4 unit properties. Many times we typically accomplish a purchase for A borrower looking for a 2 to 4 unit primary home under the FHA programs where we can do 3.5% down. But Jose will provide a couple different options as well to provide a little color in why that's typically the best option for our borrowers. So let me pass it over to Jose. He is our sales manager with 27 years of experience and has been helping borrowers for that long and is happy to help in this case. So let me highlight you, Jose, and take it over.
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. Jose Gonzalez here, 27 years experience in the business as a real estate agent and as a mortgage loan originator and sales manager here at the Mortgage Calculator, helping our team structure their deals and disclose their files. Today's topic is one that's been very dear to my heart for a long time because living in South Florida, we've always been trying to find creative ways to deal with the expense of housing, whether you're renting or whether you are owner. We have been house hacking here for many years. And this here, what we're talking about now is the ultimate house hack to really help you hedge against all of these increases, especially in the last year and a half, increases in housing expenses. So this is the possibility to purchase a residential multi-unit property up to 4 units. Residential income, aka residential multi-unit, is usually a 2 to 4 unit property. Now there are multiple financing options for residential multi-unit property. In this example here, we're going to be focusing on primary ownership here. So financing for primary residences, because our topic here, our subtopic here is basically how do we deal with the increases in housing expense for your primary residences. What are you going to do when you want to qualify to live somewhere and you're trying to find a little extra income as well to help you qualify legally for that property? And a multi-unit property is the perfect solution to combating the increases or the decrease in affordability of the property, because you can use up to 75% of the income being generated by the other units. So in this case, we're going to take it all the way to a 4-unit property, the ultimate house hack. In this scenario, you can use the income from the other 3 units, 75% of that income from the other 3 units, to help the borrower qualify along with their income, whether they're W-2, self-employed, whatever they may be. So you're going to combine rental income, 75% of that rental income, because it's an unseasoned rental. That means that it has not yet been reported on the tax returns, because this is a full doc option. It has not been reported on the tax returns. So the guidelines allow 75% of that income to be used because they apply a 25% expense factor. So laying down a little bit of context there for everybody, now we're going to dive into the actual meat and potatoes of the matter here, right? We have a 4-unit property, and we have a $500,000 purchase price, $482,500 loan. So obviously this is not a South Florida pricing example. You're not going to find a 4-unit in South Florida for that price, but we wanted to keep it uniform with the other examples we've given with the price. So 3.5% down payment, and look at those rates. I mean, we did obviously have a dip, as Nick just mentioned. Fed gave us some positive feedback yesterday. They're easing up on tightening of the noose. So we do have right there at no discount points, 5.5% rate on a 4-unit property, $27.88 on the principal and interest payment, and you can buy it down to as low as 5 1/8 for about a half a point, a little bit over a half a point. So again, great deal. And there were probably a couple of additional buy down options, but this is illustrative purposes only, so you can see the amazing deal that you can get here on an FHA loan, 4-unit. Now, the one thing I would note, whenever you're financing a 3 to 4-unit property through an FHA loan, there is I can't recall the exact wording, like a sustainability clause where the 4 units have to be able to pay for the full housing expense. So they run a separate little test to see if the income generated by those 4 units would be enough to cover 100% of the full housing expense with taxes, insurance, mortgage insurance, and everything. So that is a little bit of a caveat for a 3 and 4-unit property when using FHA. So be mindful of that. Check your rental comps, or if the property is rented, see where the leases are at. Do your math and see if it's going to work for that property. So that's the FHA option. However, I have uncovered a few other very interesting options. There is the 5% down Home Possible option. Now, Home Possible is a Freddie Mac program. So this is a prime example where my team out there can see when I do the training, where we're talking about different loan types, and we're talking about conventional loans, and we're talking about how not all conventional loans are the same just because they're conventional. Freddie and Fannie are different. Well, here is a glaring example of how they are so different, because Freddie will let you go as low as 5% down on your conventional purchase, but this is only through Home Possible, which does have income limitations. You have to look at the HUD median income for the census tract of that property, and you can get that information, obtain that information through the Home Possible geocoder, run the address, and see if the address qualifies. If the address or see what, not if it qualifies, but see what the HUD median income is for the area. But as far as qualification, when you run the address, if the property is in a low to moderate income census tract, then the income restriction is lifted, and there is no income restriction because they obviously want additional investment in those low to moderate income communities. So keep that in mind. Very, very powerful house hack here, because on top of everything, in areas where there's a tight market and you may have multiple offers, especially on a 4-unit property, you want to have your borrower be as competitive as possible, and sometimes the conventional loan will carry a little bit more weight when they're reviewing the offers than the FHA financed offer. So it's good to give your borrower the 2 pre-approvals and then let them pick and choose their battles when they're out there submitting offers. But definitely 5% down, conventional. And as an additional note, Home Possible does have reduced mortgage insurance as well, and reduced rates. So, I mean, it's a win-win-win situation. And then if you look at the rates, you're going to see that, they're a little bit higher in cost than FHA, but still very good rates. You're looking at 5.875, giving you a little bit of a lender credit, 5.75 costing like around a quarter point. And if we go back a minute to the FHA, the par rate was 5.5, and 5.75 was given a $2,406 lender credit that borrower can apply towards your closing costs. So you can see that the 5% option is a little costly, but then again, there's other market factors going on here. On top of the fact that the Home Possible does have reduced MI, so depending on your borrower's credit score, it could be considerably cheaper for the MI. It could be half the cost than the FHA MI, at which point the interest rate may or may not come into play anymore. right? So now we're going to look at another 4-unit because I want to show a little bit of context and perspective here. Now this option again was 5% down. Now we go to the more traditional, and this again, this is primary still. None of these are investment. This is your traditional, conventional. When it's not home possible, I did find a 20% down option, which is still very good because we've had certain changes and decreases in rates. So there was one option that popped up for 2 to 4 unit. But again, you can see the rates much higher. Home possible, definitely the way to go if at all possible. And FHA, definitely the way to go if at all possible. Now, to add a little extra context to the situation, I'm going to show our best option for a DSCR 4-unit purchase. Now, mind you, now we're going from primary to investment, and we're going from full doc with tax returns, pay stubs, W-2s, whichever is applicable for your borrower, to a DSCR loan where we're only using the cash flow generated by the property to qualify the borrower. Totally different situation, but you will note that not so different in the rates here, because now, mind you, this is investment, this is not primary. So if you remember the rates that Nick was putting up for the investment property purchase in the high 6s with like almost 3 points, right here we have, for example, 7.75, and that's about 2.25 points on that one for a 20% down 4-unit investment property DSCR loan with no income verification from the borrower, no job information, no tax transcripts to worry about, and slow down your deal. So again, this further shows how and why the DSCR is so popular for the investors. So again, we just come on over here to the conventional, from primary 4-unit to DSCR 4-unit. There's about a 1 3/4% interest rate difference and more or less the same cost. So 4 very good options. One obviously totally different end of the spectrum, but all great options. So great opportunity for everybody to come into the market right now. We do have a good window of opportunity. There's some increased liquidity in the market, which is further helping the non-QM rates. So we look forward to assisting all of our MLOs and our future MLOs and anybody else who's out there listening to us. We can help you out, make that dream come true, and you can own your investment ultimate house hack for you.
All right, thank you, sir. Well, let's go ahead and let Kyle close it out and see how you can link up with one of our team members. I think you're muted there, Kyle.
Oh, sorry about that. So as Jose was saying, house hack, right? So these are great things that we can do, but a lot of times we're going to need consultants to walk us through this, right? So we have over 350 loan officers all around the country. We're licensed in 17 states, but with the DSCR business purpose loans like Jose went over and some other ones, we can do those in most states, right? But you're going to need a consultant to walk you through the process. And at the Mortgage Calculator, not only can our loan officers help you with conventional FHA, VA, USDA, but all of the different non-QM programs, from bank statement to asset utilization to DSCR, of course, fix and flip, ground up construction, SBA loans. So we can help you out with anything, including maneuvering these other programs just like FHA, but maneuvering it in a way to consult you to where you can do what we're talking about, something like this, what they kind of call the house hacking, right? So definitely get with us. If you're already working with one of our loan officers, maybe they shared this with your video, that's great. Get with them. They can quote your actual scenarios within just a few minutes. And if you're not working with one of our loan officers yet, please visit our website, themortgagecalculator.com. It's actually right there. And we can connect you with one of our loan officers. You could also send us an email to info@themortgagecalculator.com so we can put you in touch with one of our loan officers that can consult you through the process of exactly what you're looking to get. So keep in mind, we do this every weekday at 11 a.m. Eastern, so you can tune in, see the rates daily, and watch us do a deep dive into one of the different subjects that we choose every day. So thank you all for tuning in. Hopefully we'll see you tomorrow, 11 a.m. Eastern time. Everybody have a great day.